Hi, good afternoon or good evening, Tasty Nation. Marco, I'm Trader here. All right, post-market peak time. Awesome day today, as you probably seen. Here is the /NQ, which is E-mini futures. IV rank is 71% on that. I am looking at this for aftermarket hours, as you can see right here. So what a day, right? I mean, take a look. So here is Wednesday. Here is Wednesday night. Here is Thursday morning. And yep, remember I think I talked about it on this morning's post. I was looking to see on my 15-minute, my 15-minute chart, which is what I'm here, if it'll break below overnight lows, and of course it did. And wasn't too hard to do because I guess just kept on going down right around here, and it kept on going. And it usually doesn't go straight down even on the 15-minute chart, so they tried to goose it up at the end, and it failed a little bit. But the awesome part is if you go to your daily chart, whoa, hold on, let me zoom out real quick. Yep, IV ranks at 71% on the /NQ. Now, most of you are not going to be trading that. You guys are going to be doing QQQ. Let's go over here to QQQ. And so here's kind of how I was watching stuff today. I had my 4-grid pattern here. Let me move this over. There we go. So I was kind of watching this today after my morning vlog post, and I was like, man, can it do it? So what I was looking for was well, I was actually watching, prior to the market on my 15-minute chart right here, and I was just kind of wondering if they would bounce off and go higher. I didn't want that to happen, but sure enough, we got lucky. And as you can see, IV rank is 63.5. It got as high as 75, I think, intraday on IV rank. I think I posted something on Twitter. I was all over the place today, so I wasn't at my normal computer, so I just jumped on other people's computer wherever I was at, and that's the best part about doing it. So as you can see, it got high 61. It got 52 earlier. I tweeted about, and it was pretty nuts. Currently, it's at 62 QQQ. I'm thinking it'll follow through. So you could have put on more positions, and if you did 75 like I did, you could put on more. And it might just get to 100 tomorrow is what I'm thinking. Let me zoom in on my daily right here. Here's the daily chart right here. So we still got room to go. See this on the daily chart? So this can go all the way down here. And this is my 6-month chart, I believe, right? Yeah, let me go out and expand this sucker out to 1 year at least. I did go in. Hold on. Yeah, see, it could easily go all the way down here. See like it did here? So it could easily touch this my 2 standard deviation Bollinger Band, right? It touched it, but it came back. Got my indicators here that my 13-day crossed below my 21-day. That's a downward trend here. Last time that happened, it didn't stay down very long though. But I think we got more room here versus I'll show you the last time that happened. I have to go all the way back to here, and that only lasted a day. The difference is now, I don't know, man. IV rank stopped at 25 back then. Of course, over here, IV rank's a lot higher. So I'm hoping this will go down more before it recovers a little bit, and we should get to 100 IV rank, I'm thinking. So that's what I'm looking at for today. So if you could, this is when premium, you can start collecting more money. So if you go to your Tastyworks platform right here, here's QQQ. Let me close my chart right here. And when it gets rich like this, if you're a brand, this is when golden, if you're just starting out, normal golden geckos are great. You can even, oh, what did I do? Sorry. Go to here. Here's my default settings in Tastyworks, and I will zoom out a little bit and do the percentages here. And yet we're normal expirations. Yep. So this is where you can collect a lot more money. You see the bid on the call side? It's not no 10 cents like it was when IV rank is lower. Now look, here is QQQ. It's only $137.59. Now watch when you go to a more expensive underlying like SPY. IV rank only 13, right? I'll do the same thing. Look, you only can sell the call for 10 cents. See the difference high IV rank makes? And so it makes it a lot easier to put on both sides, meaning the left and right, meaning the put and the call sides, if you're going to be trading these golden geckos, especially if you're starting out. This is what my project making dough with Tasty Trade was based on. So anyway, back to QQQ. What I love about Tastyworks again is it memorized what I had on, and you want to sell. If you're brand new, if you've been following me, repetition is the mother of learning. So I repeat myself a lot because I have new viewers all the time, and they haven't seen episodes I did or vlogs I did last week, let alone 6 months ago. So a golden gecko is a specific type of iron condor. Let me clear this, right? It's not it's not just an iron condor. It's been proven with the math. Just go to iron condor here. You're gonna have your normal iron condor set up, and here's your default. You're gonna sell these one standard deviation out of the money, and you want it closest to 45 days expiration. You're gonna click on this one standard deviation out of the money, and you're gonna buy the put and the call closest to 2 standard deviation out of the money. So I'm sorry, 2 standard deviations. In Tastyworks, it's very visual. You see these vertical lines here, and by default, it always go back. So this August 18th, 2017 is the normal expiration, monthly expiration that's closest to 45 days to expiration. That has been proven to be the best time to collect the most amount of theta. You'll see that in every study Tastyworks does. So here we go. Your put right here. You want your put that you're selling right here. You want it to say 84%, and you want it to line up on this dotted left side of the strike price. The stock is currently trading right here. So this dashed line is 1 standard deviation on the put side. This other one is on the call side that you're going to be selling, and then you're going to buy 2 standard deviations out on money, which is right here. All right. That's specific. So you notice I don't need to tell you the strike price, right? I don't have to tell you sell the August 18th 118 put or 128 put. I don't have to tell you that because that's almost irrelevant. You just want to make sure it fits the probabilities. And all you need to know that is the percentages. Okay? On the table view, it looks like the same way. But see, most people are used to this, and as long as you have this, you're looking for closest to 84% out of the money. So you see here, if you're going to sell a put, you want to sell it closest to 84% out of the money. So you will see here percentages out of the money right here, and you will see, well, hold on. Let me move it up. Okay, so here, see, you're selling it close to 84% out of the money here, and I'll scroll up here, and here you go. All right, so you're selling a call closer to 84% of the money. You're selling the put close to 84% of the money. And if I scroll down more, you'll see that you're buying close to 2 standard deviations of the money, which is about 96%, 97%. All right, so that's why I like the curve view a lot better, because as long as it's lined up, you know you're set. All right, and look at that. You have a probability of making 50% of your max profit, 90% on a standard golden gecko. You can do puts and calls on this. Look, that's a 10%, more than a 10% return on risk. All right, so that's what I love about these when IV rank is high. When IV rank is lower, sometimes it's better, especially if you're starting out and you don't know how to manage your role. You're gonna wanna just do the half of them. So just do half a golden color. Let me just delete this, delete this. So it's gonna look like this. So you're not worried. Excuse me. You're not worried how high it goes. You just want to make sure it stays above the put you're selling. So what this bet you're making is you're betting. See this 128? That means you're betting that QQQ will stay above $128 at the end of 50 days. 50 days from now. Okay? It can go up, it can go, as long as it stays in this green, even if it goes down a little bit, okay, you still, make money. This dark tinted area is they expect, based on this current implied volatility, that's the expected move. Here's IV rank. So why you do this is because if you heard the term buy low, sell high, that's where you're going to take that same concept, but we're really doing that with IV rank. So what do I mean by that? So see this number right here? You want to sell options. You have a better chance of not losing money when you sell options when IV rank is high, and then you buy them back when this number is low. So you're going to sell first, buy back later. Here's what that looks like. Okay, so you're going to sell when IV rank is high, and then you're going to buy your options back when it drops down low. So the reason why that works is if IV rank is the only thing that's mean reverting, meaning price is not mean reverting. It could, what goes up doesn't necessarily have to come down. You see what I mean? But look at IV rank. Let's look at the last time it hit 50. Well, last time it hit 50 was right here. It touched this green line. IV rank is 50 right here. I'll zoom in. So look how many days it stayed at 50. 1. Okay, and it dropped almost all the way down to 25, and it took only 1, 2, 3, 4, 5 days, 6 days to get down to 25. And look how fast it rose in one day. Okay, look at that, rose, and today went even higher. And that's gradual. I've seen IV rank pop a lot faster than that. You can look back here. Okay, IV rank was as low as 9.810, and it took whopping a week, and it got as high as 50. And look how long it took. I'll zoom in. Right, so look how long it took to get to 50. This is 1, 2, 3, 4, 5 trading days to get from 10 to 50, and it took a and it went even higher the next day to about, what is that? To about, I don't know, 55. And look how many days it took to get down to 25. 1, 2, basically 3 trading days, and you're back down. So you're selling up here and you're buying it back down here, or when it's lower anyway. And look, see, and notice when IV rank is high, the stock drops, and if you're doing half a golden gecko like this, you're betting what? Yeah, it can go down a little bit more, but you want to bet that it'll go higher as well as IV rank drops. Well, look at what happens when IV rank is high. Look what's happening to the stock. So remember now, if you do half a golden gecko, you're betting it'll go higher. If you're doing a full golden gecko, you're betting it'll go higher, but not go too high too fast. Either case, look what happened in QQQ. This is November 4th, right? It shot up, but it didn't shoot up too fast and too far, which means IV rank collapsed and the stock price stayed in that. Wait, I can go like this. Sorry. And then the stock price stayed in that range, right? Okay, so that's the neat thing about selling options. Now that's why the people who do the opposite lose money. All right, so let's say you wanted to buy a put. So I'm going to clear this because the market's going to go down, and I do the charts thing, and the market's going to keep on going down. So you could literally buy a put, because when you buy a put, okay, you can bet. See, when you buy a put, you're betting that the stock price will go down. All right, so the stock price is already at 137.59. So let's move it up, and let's say we want to bet that QQQ will stay below 139 at the end of, I don't know, 22 days, even if you want to do. But the last example was 50, so I could technically do this and make the time, so we're comparing apples to oranges, right? So 50 days, right? 139. You have a 40% chance of making any money. Now here's why. For you to make money, the stock has to stay below 139 at the end of 50 days, and IV rank also has to go higher than this. Not only that, here's why it's harder to make money. You need to pay $4 to make this bet. That means because you have to pay $4, even though you're selling the 139, for you to make money, QQQ has to be less than 135 to make your maximum possible profit. Why? Because 139 minus 4 is 135. So if if QQQ finishes anywhere above here, you either break even or you lose money. Okay, at the end of 50 days. And that's why a lot of people, now I know that I'm betting on the bear side and on the bullish side in this case. I'm sorry, on the bear side, and you're betting short basically. But you can flip it around. Most people get started with options buying calls. And here's where they get screwed up. All right. Let's go buy a call. Go to option and you can go to long call, hit go. And you can make any bet you want. I'll keep it at 50 because that's what we did before. Whoops, my bad. But you can do it anytime you want. So how about we do this? That's how we bet that, okay, man, the market's taking a dive. I think we're at the bottom. Let's bet that at the end of 50 days, QQQ will be above $135. Where is it now? 137. So you're already winning, right? So as long as, for you to make money though, this strike has to be here or above to make money, and IV rank has to be higher or has to stay high. So your chance of making money is only 38%. Why? Because you have to pay someone else that you're placing the bet with $5.15 to do it. So you have to add $5.15 to your strike price before you make any money. Now here's the thing. Do you know people who do these can actually still not make any money even if they're right? Because if IV rank collapses, okay, that affects how much you can well, you bought it, how much you can sell the call for to close a trade. So when you buy a call, here's the snag you're running into. And I put that on my cheat sheet. I think it's on my Twitter page somewhere. Under my media, I think you guys can go here. And I made a cheat sheet for verticals, but it'll show you what you need to see. I think it's like, oh, what did I put a cheat sheet somewhere on it. Oh man, I don't know. And right here, okay. So when you buy a call, which is a debit, you want the strike to go higher. I mean, you want stop price to go higher, and you also want the IV rank to go higher. Oh, this is a wrong picture. I should put up another one for you guys. But anyway, but here's why it's hard. And I'll do this. Switch this, go to load, and I'm gonna do look what happens in general when IV rank, when the stock market goes down like this, or an underlying goes down like this. What happens to IV rank? It goes up. See? When the stock market, when the underlying goes up, what's happening to IV rank or volatility? It drops. Well, if you're betting that the stock will go higher, even if you're right, but then volatility drops and you need volatility to go higher to make money because you're buying an option, that's why you get all stressed out and confused. Why aren't I making money? Why aren't I making money? So that's why the smart money has always been done is you always be the house and you want to sell the option. Why? Because when you sell when IV rank is high and you buy when IV rank is low, what are you doing? You're selling and you're betting, if you're doing the puts anyway, that the stock price will go higher when IV rank is high, right? So perfectly, you're going to kind of bet against everyone else. So I usually find if I am doing something that everyone else is doing, I'm doing it wrong. If I'm doing something contrary to what everyone else is doing, it usually means I'm doing right and making some money there. So that's why it's been so profitable when you do that. It's just been hard lately because if I change this to a 10-year chart, whoops, my bad. Right here. The last few years, I mean, look how low IV rank has kind of been low, right? Because we've been in such this bull market. This is, you know, last few years, right? 12, 13, 14, 15, 16, 17. But as long as there's these pockets here, you can do it. It's really great. All right, I kind of went off topic. Sorry, a little bit. I kind of ramble. I apologize for that. I just kind of get excited and I remember all the questions I get asked. So anyway, that's what I'm looking at for what I looked at today. And tomorrow morning, I'm going to be looking for some follow through on well, actually, I'm going to be looking at follow through on /NQ because this is what I follow, you know, overnight, and this is my 1 minute chart, and I'll zoom back out. And basically, I want to see this keep on going up. Good. See, look, it bounced up there and go here. So that's what I'm looking at. So when this rallies up like this, see how this rallies up? I just want to make sure the actual underlying doesn't go I mean, I want it to fail. Like it went up, but it couldn't bust through. And then look, it turns over, right? That means it has to go back down again. So same like during the day. This is a 1 minute chart during the day. And I usually look at the 15-minute chart. It's kind of easier. So I do look at this to say, hey, when this kind of rises up to the top, now what happens? Is the stock price moving with it or no? If not, that's really good, because if I want it to go down, because I want Ivy Bank to pop. Okay, so, and vice versa as well. So look, see, it's trying to turn in green here, and I don't mind if it goes up. All this comes up, whatever. I just don't want it. I don't want the stock price to follow. If it doesn't, then when this turns over and goes back down, it'll pull that sucker down. All right, that's what I'm looking at. You guys have a great night. I'll talk to you guys later.